Pick up on the markets now. The JSE will be hoping to benefit from a positive session coming from global trade. Global sentiment was supported on Wednesday when the JSE was closed for Freedom Day amid promises from Beijing that it would enact targeted policy support for small businesses and agriculture as it continues to battle the pandemic. Makwe Masilela, Chief Investment Officer and founder at Makwe Fund Managers, joining us now to help us make sense of the latest market moves. Mr. Masilela, thank you very much for your time. In the last session, we saw a rebound in the local index, but not so much on the currency side. Talk us through how the JSE has opened.
Morning to you and to the viewers. Yes, we managed to track global sentiments and what is happening in Europe. We managed to open up and mainly driven by our resources, benefiting from these high resources or commodity prices, and also benefiting from this weaker rand, as we are saying. And the whole issue about the weaker rand, here we are seeing the dollar strengthening, all because they expect the U.S. Central Bank to start aggressively increasing interest rates, and also because we know that it gets to be seen as a safe haven, especially when we have geopolitical tension, and also given the fact that the likes of European Union, our major trading partner, we've seen the euro itself touching almost a 5-year low. So we also managed to track that. Hence we see the rand struggling and probably will continue to struggle in the near term, and especially given that the Bank of Japan disappointed, it did nothing when it comes to their interest rates.
Yeah, let's talk about the World Bank Group, which says it expects food and energy price surges that have worsened during this Russia-Ukraine war to last all the way through to 2024. Help us make sense of those sentiments.
It is anyone's guess. They can last up until 2024 or even much longer than that, depending on the impact of the law and depending how severe, this war or the escalation thereof will be. As we're talking now, we've just seen this morning that the Russian president has just started escalating the war, doing some verbal intervention. So we don't know what's going to happen to that. But yes, the reason being both countries, Russia itself is a major player when it comes to the energy market. So if you have seen yesterday that they will start stopping supply to the likes of Poland and Bulgaria, that managed to increase the energy prices, the gas prices that side. And also when it comes to agricultural commodities, your wheat, your grain, your butter, sunflower oil. So these are the major guys who are playing in that. And also remember, they are also part and have access to the Black Sea, where most of the things get to be transported. Yes, we share the sentiment that the effect thereof will last much longer, and it can still be 2023, 24, 25. I guess it's everyone's guess, but so far it's not okay.
Let's quickly touch on company news. Clicks publishing its interim results for the 6 months, which ended on February 28. How are they looking?
It continues to prove to us totally the resilience of their business model, how defensive that model is. The guys, they expect for 6 months to see their group revenue going up by 9%, and also when it comes to interim dividends to increase by 26%, just like their profits to increase by 26%, and most importantly, the guys managed to continue to increase the market share. And given that they've been operating in a situation where the consumer has been constrained, we've got the impact of COVID-19, and also the unrest of July had a very significant impact when it comes to their results. But yes, when you compare them to a life of Discam, which they expected that for the year their profits will go up by almost 29%, and also when it comes to the unrest, the likes of Discam were not impacted that severely. But you compare the two, Discam stands to have almost 170, 180 stores. Clicks are talking almost 650 or so. And even the market value of Discam and Clicks, Discam here you are talking almost 32 billion, and Clicks are talking almost 78 billion rands.
Yeah. Let's conclude the conversation with technology company Meta shares, which are soaring on the back of Facebook recording stronger growth, at least in the last financial year. Talk us through how their numbers are looking.
Maybe let's note something. When it comes to Meta, their core app, which is Facebook, Instagram, and the likes of WhatsApp, they account for almost 97% of their revenue. And we've seen for the first time ever, their revenue has been slowing down, have managed to go up less than expected. But you look at the subscribers numbers, the average revenue user managed to go up, so that itself, it lifted the stock. And the revenue, I guess it was impacted by all this new regulation, the competition that managed to increase as well. And also the guys have to navigate the new regulation, especially when it comes to Europe. But so far, that managed to increase the share price.
Makwe Masilela, that's the Chief Investment Officer and founder at Makwe Fund Managers. Thank you very much for that markets update. Let's